enable. ICICI Prudential Life Insurance and CNBC-TV 18 present Mission Insure India. Life insurance for all.
The Indian insurance sector, both life and non-life, have grown at a rapid clip. But what hasn't grown is the penetration of insurance in India. Life insurance penetration stands at 2.7% according to the last economic survey numbers. This compares with a global average of 3.47%, 1 full percentage point higher. Other Asian countries like Malaysia at 4.7%, Thailand at 5.4%, China again at 4.77% have all better insurance penetration than India has. But more important is that even those who buy insurance protection in India don't buy enough protection. The protection gap, as it is called, in India is calculated at $8.5 trillion, while comparably it's just $1 trillion a gap for, say, Indonesia and Thailand, both comparable countries. So how does one develop the insurance sector? What can companies do? What can industry bodies do? What can the government and the regulator do? That's the question we are asking today. And our elite panel to answer these questions includes Mr. Nilesh Sathe, whole-time member on the board of IRDAI, the insurance regulator, Puneet, Nanda, Deputy Managing Director, ICICI Pru Life Insurance, Mr. V. Manickam, Secretary General, Life Insurance Council, and Yashish Dahiya, the CEO of Policybazaar. Gentlemen, thank you very much for sparing time for us. Mr. Sathe, well, as the senior most, let me start with you. Insurance penetration at 2.7%, other Asian countries are almost double at 4.7%. Is this only a product of a low per capita income, or is it more ignorance?
How do we calculate penetration? Penetration is the insurance to GDP ratio. Now the insurance premium, if it increases substantially at a faster rate than the GDP, obviously the penetration will go up. And since GDP is growing reasonably well at 6-7% for the last couple of years, obviously unless insurance premium grows at a higher rate than that, the penetration will not go up. And let me tell you, over a period of time it is seen that the insurance penetration has been increasing, though not at substantial rate or the desired rate, but it has been increasing. And that is a good sign.
Okay. What would you say, Puneet, to that? Is this because of the unaffordability factor, a lot of people are not buying protection? Or is it that, we haven't even reached the message?
I think it's a combination of everything. The most important, of course, is the awareness levels. The point you made about message, I think that is a responsibility for all of us together to ensure that. But if I look at it historically, I think it is also a bit to do with affordability. You know, when the income levels in a country are low, people are worried about basic necessities. Also, India traditionally, culturally had a very strong joint family system. Where does insurance come in? Insurance comes if you are not there, who takes care of your dependents? In the old joint family system, the rest of the family would take care of your dependents like you took care of their dependent. I think as families are becoming nuclear, as income levels are increasing, at least that part is getting taken care of. And I think right now the single most important agenda for all of us is to increase the awareness levels. And I think government is playing its role, regulators playing its role, industry is playing its role, distributors are playing their role. But clearly there's a long way to go for all of us.
Okay. What would you say, Mr. Manickam? Is it that a large number of people are not even aware that they have to buy this product? It is affordable, but they are not buying protection.
The average premium per policy is only 22,000 rupees, whereas the affordable income of a fellow Indian is more than 2 lakh rupees. When he is having disposable income of more than 2 lakh rupees, and he is able to, he is having only 22,000 rupees as a premium, there is enough room for them to go for higher number of policies, either term insurance policies or endowment policies, all these things. What I can say, awareness is very much there in India for life insurance. Honorable Prime Minister Modi ji has come out with the PMJJBY that has given added boost to the awareness. Yes. So awareness is very much there. It is affordability also is there.
under-penetration to the protection gap. The problem is not just that those who can afford are not buying insurance, but they don't seem to be buying enough insurance. Yashish, how do you look at this problem? Why is it that people, should be insuring themselves for probably 1 crore? Their affordability is there, but they think probably 10 lakhs is enough. That seems to be the bigger problem, isn't it?
I totally agree. I think the bigger issue is when a family loses that breadwinner, and it doesn't happen, it should never happen, but in life it does happen. When that happens, the economic void created is very deep. And people do not fully appreciate the severity of that. And that is not communicated enough also. I think we as an industry have failed at communicating the size of that void. See, typically, if you look at the insurance industry today, roughly 97% of all premium is going towards some form of savings products. Whereas, what is going towards pure protection is very, very small. And I think that is the reason as an industry, we haven't done enough to educate the consumer on that need and that void. And that void, as Sir pointed out, in a nuclear family, today I have so many situations where some friend has expired, somebody has expired, and they are in a financially difficult position. And then friends get together to put some money together, etc. But it's very little compared to the needs, the long-term needs of that family. And I think that gap is, whatever the numbers say, this 2.7%, etc. actually means nothing. That gap is way too wide, right? Today, I would say there are about 1 million, 2 million pure protection policies being sold in this country, which is just too small.
What is it as a percentage of total insurance?
I think as number of policies will be 3%. And that is the reason the biggest issue you are having is a sum assured to premium difference. People are paying a premium, but that premium is not going towards the sum assured.
Yeah.
And the protection is the reason for this industry. So I think somewhere that piece is not being focused sufficiently.
Well, Puneet, the numbers that we were given from the industry is that there is a gap of $8.5 trillion in terms of protection needed, but protection actually bought. How do you measure this number in the first place?
So there are multilateral agencies which do this. So this particular report is a report, I think, by Swiss Re. They do this once in 5 years. For various countries in the world. So protection gap, just for everybody's understanding, simply means what is the required sum assured in the country minus the actual sum assured. And it includes group insurance, individual insurance, everything. And how do you measure what is the required sum assured? I think there are various ways of calculating human life value, etc. It is using that. And on top of that, they also add depending on the loans, the retail loans, the mortgage, etc. So there is supposed to be a cover on that also. So you measure it that way. And on that metric, clearly it's a staggering number. And Yashish spoke about the fact that 1 or 2 million people have ever bought a protection policy. I can bet 1 or 2% of that 1 or 2 million have bought adequate. First is less number of people are buying, and those who are buying are not taking adequate cover for themselves. The whole concept is very simple. If you are not around, do you have enough for your family to live the kind of life they would like to live?
Okay, that question is not asked in such simple terms. But Mr. Sathe, what would be, the way to resolve this? Is this something which the regulator can do, or is this the responsibility of the industry itself, the industry body and the companies which comprise the industry?
See, Latha, actually, I will not say that this is the job only of a regulator. It's the government, the regulator, as he said, all of us have to evolve it and take it forward. Now, the question is, why? Why is it that people do not understand that there is a protection gap? There are many reasons for this, and the main is, many times in India, because of the social structure that we have, because of the family, attachment that we have, we always think that whatever I will save should go to my kith and kin, to my children. That is not the case with Western countries. As a result of which, they think that, okay, so long as I am alive, I should get protection. So that my family, means my wife, not even beyond that, should get adequate money. As in case of insurance, we say that insurance, what is insurance? It's the human life value. It's the value of a money producing machine, economic value.
Yes.
A human being who is producing, who is earning, that is his, he's a money producing machine. Economic value. It should be a replacement of that.
Yes.
And from that point of view, protection, there is no substitute for protection. And the protection can be given only by insurance. No other savings product, neither mutual fund nor bank deposit, nothing can give you protection to that extent. When people say that the return on insurance is pretty low, the question is, how do you calculate return? If a person dies immediately after taking a policy, just imagine what will be the rate of return. But nobody wants to die. And actually insurance is not, we say that it is not for those who die, but it is for those who survive. Yes, so after his death, those who are dependent on him, it is for them.
But why hasn't the industry taken the effort to educate this part? I mean, it's a cheaper product, pure protection, term insurance. Why has the industry, concentrated on savings and endowment? Most of the advertisements don't directly tell you that protection is cheap and protection is necessary. The message doesn't come across, Mr. Manickam.
As an industry, we are taking all out efforts to educate the people. As far as I am concerned, the change should come from within. If at all the breadwinner is having real love and affection for the family, in case if I am not available, my family should live in the same standard of life. If at all he is having sense of belonging to the family, automatically the gap can be bridged quickly.
Sir, it is not that, Mr. Manickam, it's not that automatic. People, probably 50 years ago understood what is an FD product and how it is different from a savings account. People probably in the last 20 years or 10 years have understood what is a mutual fund product. I know shares are risky, somebody else is taking the investment decision for me. Mutual fund product was understood. I don't think the insurance product, the differentiation between endowment, sum assured, money back and pure protection, pure term, has been explained. It's probably more sophisticated, more difficult. But Puneet, would you say that the industry can do more to communicate?
No, certainly. I think we have to take this responsibility jointly, all of us, for several reasons that we discussed earlier. Probably India was not at the right stage, but now, over the last 2 or 3 years, as some of you would have noticed, a lot of our advertising is around awareness, is around protection. Most of us today are very, very focused on that category. And for whatever reason, if you have not done in the past, I think it's an opportunity for all of us to do it now. As Mr. Manickam pointed out, I think the single biggest advertising and awareness building for this country was done by this government when they launched the Pradhan Mantri, Jeevan Jyoti Bima Yojana. The sum assured may be small, but I think it brought awareness levels to the last mile. In the first year of their launch, in 15-16, I remember they launched, in the first year of their launch, 3 crore policies were sold. The entire industry, LIC, all of us put together never used to sell that much. In 1 year, and remember the scheme was open for 1 month. It sold 3 crore. In the last year, the number had exceeded 5 crore. So I think all of these together will ensure that as we go ahead, awareness increases. And while we increase awareness, obviously we have to work on all the other things, better product, better service, better onboarding, better claims, better service, and all of those things.
ICICI Prudential Life Insurance and CNBC-TV 18 present Mission Insure India. Life insurance for all.
Yashish, how are you at Policybazaar propagating the idea? Is there a number? Like, if I'm earning so much at this stage in life, this is the amount I have to buy. Is the formula simple enough and is it getting enough response?
I'll just make a slightly controversial statement here. I'll take a person who's earning 3 lakh rupees. Let's say the protection he needs is 30 lakh rupees. We all agree to that a protection requires 30 lakh rupees. If he buys that through an investment, endowment, any product, typically the sum assured is 10 times of premium. That means he has to put his entire salary, pre-tax, into that product to just get his sum assured. So it's financially impossible. The only way he can protect and get that adequate protection is through term insurance. Now let's get to term insurance. If he has to buy 30 lakh rupees of term insurance, by my math, that should cost him about 300 to 400 rupees a month. That is 3,000, 4,000, 300 rupees a month. Now a person earning 3 lakh rupees can afford 3,000 rupees a month, 300 rupees a month. So protection is not expensive. It's quite cheap. It doesn't cost so much. we should not, I think this is where I make a controversial statement. I think we as an industry have been confusing investment and protection and saying investment will cause protection. It cannot. It just cannot give adequate protection because I have to put my entire income into a policy just to protect myself, which is financially impossible.
Is it only an awareness issue, or can tax incentives make a difference?
No, I think it's a lot of things. The biggest thing, of course, is awareness. But along with that, we do need to keep innovating on product structures because it's from two perspectives. The basic product may still be just protection or term insurance, but there can be many variations of that. How long you pay for, premium paying term, how long is the cover, how do you get payout, is it lump sum, is it in various stage, do you bundle health along with it, either in the form of riders or whatever, what will be the form of payment of that. So a lot of product design innovation can be brought in while ensuring that things are kept simple, number one. Number two, I think this whole concept of onboarding, when you actually get a customer to agree, after that also it's a very elaborate process before the customer actually gets the policy issued. Especially on higher covers, there is medical requirement, there's a lot of underwriting requirement. We have to use technology, we have to use data analytics to try and simplify that, to be able to give things literally across the counter. So for example, our vision is that it should be as easy to buy a life cover as it is to take an FD in a bank. Why should we not do that? Of course, for that a lot of things have to fall in place, but I think that is the second thing. The third, of course, is to ensure that, when the moment of truth comes, the claims are indeed paid and paid fast. Thanks to the efforts of IRDAI, I think IRDAI has brought a lot of focus on that on the industry. Today, the claims payout ratios are very good. I think pretty much the entire industry is 90% plus and the good companies are 95% plus, which is really good because it helps. At the same time, how long does it take to pay the claim? IRDAI has also defined TATs for that, and all of us in the good companies actually ensure that it is less than that. Along with all of that, I think the whole question of awareness has to go on and on and on. You spoke about tax. I think that is an important element. To some extent, there are already some tax benefits available for the industry. But if I look at protection specifically, today, the indirect tax, the main indirect tax is GST. Yes. If I buy term insurance, the GST rate is 18%. You have seen how the GST Council of the government has progressively brought down GST rates for various things. For luxury items also it is 18%. For something that is necessity, it is 18%. There is a category where government says are essential commodities, where they charge, the GST rate is 5%. If the government thinks this is essential, they should encourage it by bringing in that. And remember, this is a country where there is no social security. The government does not take care of its citizens if something goes wrong. There is no, government pension, there is no social security. So this is the way to incentivize.
Will the millennial generation automatically solve this problem? I mean, we have seen the first offering of digital term products, and it's doing very well. As you said, it's probably 30% of all protection in terms of sum assured. Do you think the millennial generation will understand this better?
The direction is already very clear. In my opinion, and you can have this data validated, 30% of all sum assured of this country is now coming from a digital channel. Online, whether it's the company's websites, whether it's people like us, etc., etc. Very big number for such a large industry. So I think the answer is already there, that the consumers want to buy protection, relatively. Of course, they have to be educated. And that is happening. I think the good part is there's a lot happening at the regulator and at the company's levels. People are suddenly talking about sum assured, and it's becoming a priority.
Okay.
That was not so if I look at 5-7 years ago. It is a less understood industry, the protection part of it. It is a very small part of the industry. It is a very useful part of the industry. I think everybody is getting smarter at it, whether it's the regulators, the companies, people like us, the consumer. It's a J curve. It's growing fast. That's all I can say.
All right. Just a couple of words on where do you see the future? Is it a J curve? Do you think we could, see the industry perhaps doubling in the next 4 or 5 years?
I think if we double the protection part in the next 4 or 5 years, we would have seriously underperformed.
Okay.
I think the scope is far, far more. We've done some research around the world. Typically, when per capita income of a country reaches somewhere between $1,500 to $2,000, there is indeed a very significant J curve that comes. India just reached that stage. And along with all other things that we are speaking about, it will happen. You spoke about the millennial generation. One of the things of this generation is it is more a consumerist society than a saving society. And what do consumers do? They borrow, right, to buy things. When you borrow, you are taking a huge risk. The simplest thing to do is take life cover along with that, whatever, whether it is a personal loan.
But do you see
or
it happening?
It is absolutely happening. It is absolutely happening. So today, you see, the retail credit growth. Along with that, the rate of growth of the cover part along that is pretty much in line with that. The other thing that the millennial generation wants is simplicity and convenience. So, the currency is time, honestly. So, if you make things simple, whether through digital channel at a click of a button or at, with one
Easy
stroke
KYC,
thing.
okay.
And today there is enough data, available in the industry for us to be able to take those analytical calls, to be able to, make life simpler for the consumer. And as this goes along, as I said, I think the AUM will double in the next 5 years, but the sum assured can be multiple times of that.
Your guess?
Yes, I also agree with Puneet. The only issue is, even today, I have come across a lot of educated people, so to say, forget of financial literacy or financial, as you were referring to. They say that if I buy protection, what is it that I will get if I survive? And when the answer is no, they just step back.
Okay.
Now that is something which needs to be told repeatedly, conveyed that this is the product for you need this product protection. But then what insurance companies are doing? Okay, then let me have I will return you the premium what you have paid if you survive.
Okay.
That is something which is liked. Or these are the riders which are added to it. Health insurance rider, cancer protection, this and that. They like that. So this is bundling of a product, term insurance, but along with that. And that is something which is liked by the millennials.
Okay.
And definitely the term insurance which is being bought more is by educated, not by less educated.
Okay.
So that is something. So as the education level will go up, as the GDP will go up, and it is going up, obviously the insurance, the protection, the penetration, all these parameters will improve for India.
Okay. Thank you very much, Mr. Sathe. That's extremely well summed up. Development itself will help ensure that citizens are buying adequate protection. And this mission Insure India that ICICI Pru and CNBC-TV 18 is launching today with this show is exactly trying to achieve that, to ensure that individuals understand how much protection has to be bought and the protection part of life insurance finds its rightful place in a family budget. Thank you very much for watching this special edition.
ICICI Prudential Life Insurance and CNBC-TV 18 present Mission Insure India. Life insurance for all. Focus. Ideate. Innovate. Enable.